LIC Housing. What's really changed for that counter? When do we see a pickup in NIMs and growth, and also the impact of proposed NHB norms for the company as well? We've got Vinay Shah joining us, MD and CFO at LIC Housing. Thanks so much for joining us, Vinay. Now, given the heightened liquidity concerns that we've seen over the past couple of months, how do you assess the entire situation now vis-a-vis what we saw in October?
Good morning. The liquidity position as compared to October, November has eased quite a lot now. We are finding it that both in the short tenures, longer tenures, everywhere it has eased substantially now. At that point of time also, getting money for our company was not a problem. Being a AAA rated company, we are getting money, though slightly at higher rates, I would admit, but now it has eased to a substantial. In March also, we expect that it happens every year during the second fortnight of March. Probably there is some tightening because of advanced tax payments and other things, but that's an annual thing which happens every year. So now the position is fairly good.
Your calculated spreads have also declined. What led to this decline, and especially the decline that one has seen in the yields for LIC Housing Finance?
No, on the contrary, our spreads have been stable. Last year, starting April onwards till the 1st of January, we have increased our lending rates by 70 basis points, and this has been transferred to whole of our back book, whereby about 80-85% of the book is on floating basis. So we have in fact had similar spreads, and we did not have much of a decline as far as the spreads go.
Good morning. Can you just tell us what the outlook is on your borrowing mix change given the high proportion of NCDs? How do you see your borrowing costs and your spreads shaping up?
Borrowing cost also, if I compare it from last year levels, they have gone up. As compared to October, November and the present position, there has been a decline of about 30 basis points across all tenors. Going ahead, I see that if the rates remain stable, there has also been some benefit from the RBI repo rate decrease also. So going ahead, I feel if the rates remain stable, the margins would be at the same level or they may improve also. The yields, as I said before, also have gone up as compared to last year, year on year, and this has also translated into a good increase, a good growth in our net interest income also.
There's also been a sharp increase in the builder loan growth despite high delinquencies. What's the rationale for this high growth in the segment, given that already there's high stress scenario in real estate and continues to be so?
See, I'll tell you that yes, during current year the builder growth looks very high. Now the main reason is that we are operating at a very small base, and out of say about 246 odd accounts, accounts which we are servicing, 4 or 5 accounts only constitute the major chunk of the delinquencies, NPAs. This is one part. Secondly, our builder loan portfolio as such, if we see the full book, is only about 6%. Its share is only about 6%. And the NPAs also, I see resolution coming in most of them. It may take some time in between, but we are very sure that the resolutions will come. The comforting fact there is the underlying security that we have. Recently in Q2 we had made one recovery wherein we recovered the full principal, and not only that, a major part of the interest also.
You know, there have been some signs of struggling growth in home loans, even as larger competitors like HDFC grow. What is the reason for this, you know, as you see it, and when can we expect a pickup?
The real estate sector per se, in the last 2-3 years, you will agree that has undergone, I would not like to use the word disruption, but challenges, yes. Starting from demonetization, then RERA came, GST came, the liquidity crunch that the sector experienced in Q3. But of late, things are picking up. We expect better growth across everywhere throughout the country, especially because of two reasons. One is the lowering of the GST rates on the under construction projects, and the number two is the continuity of housing subsidy, which the government has now extended till March 2020. So I believe that now a good pickup will be there. The market sentiment is improving, and going ahead, I would still see a growth rate of around 15% in housing loan disbursements.
All right. Thank you so much then for taking time out and joining in, giving us a heads up of how things for the sector as well are shaping up, as well as for your company as a whole.